So today we have on the show, we have Kenny Doonan from Mitchell & Doonan Tax Services. Tell us a little about yourself.
So my name is Kenny Doonan. I'm one half of Mitchell & Doonan. A lot of people also know us as Doonan Tax Services. It's a second generation company. My uncle started it maybe 30 years ago. He was teaching for most of his career, and then he became a lawyer at night, and then he started his own tax preparation on the side, and he retired in probably 2017, right around there. And so since then, it's been myself and my partner, Tim Mitchell, and we've been taking it on and running it since. We're located in the Bronx on Williamsbridge Road, and we service all 50 states, but we're heavy in the tri-state, obviously, and yeah, so look out for us. We're also online. We're also on Instagram if you want to look us up, Mitchell & Doonan, where we do a couple quick tax videos.
So my first question is, what is the most important thing on a tax return?
The most important thing on any tax return that I always feel is income and withholding. So everyone always wants to know about their refund. It's naturally the number one question that everyone has. Why is my refund going up? Why is my refund going down? There's credits, there's deductions, there's tons of different things that can impact this. But the number one thing that's 90% of your return is how much you made and how much you paid in taxes.
Okay. For next year or even the year after that, what's the one thing they can do they should be doing right now?
One of the things you should be doing is looking at your withholding. And one of the big things that happened in 2018 was everyone's withholding shifted. So the old single zero, when people used to go to work and they used to do single zero, they used to get a big refund. And so they're anticipating this big refund at the end of the year. Now what happened after 2018 was everyone's single zero used to be 20%, now it's 15%, now it's 16%. So really what happened is kind of like there was a universal shift on the scale of withholding. So we have to tell people, go back to your job now. Now they automatically made a change. You have to manually go back to your payroll department and request, I want an extra $100 withheld to check. Right. I want an extra $50 withheld to check. Whatever it is, it's not all apples to apples, which makes it a little bit tougher.
It definitely affected a lot of people because I experienced that one time and I had to, I owed money. I was like, what's going on? I didn't really understand it. I was like, what? Oh, that's good. Yeah.
But one of the reasons probably you owe money because you probably went to the wrong person, right? Yeah. So tell us a different about who you go to, because a lot of people think they can do it online and it's such an easy thing.
Yeah. And even going back to withholding, that's we reiterate that and we hammer that home so often. So I can't tell you how many people that come into our office, we're giving them withholding forms, especially if they're new clients, because they're like, oh my God, I owe money. How do I owe money? I have 4 kids, I have a mortgage, I have this. Right. It's like, all right, well, you made $100,000, you only withheld $7,000 in taxes. Yeah. Or your wife's got a job and they're practically taking nothing out because she's working a side job. And they don't know that she's also married to another man that's putting you in a higher income tax bracket. So you have to have both of you and your spouse have to be withheld correctly.
Okay.
All right. Since I know a lot of entrepreneurs, a lot of entrepreneurs, and a good question would be, do I need an LLC if I own my own business?
So that's one of the biggest things now because TikTok is so popular, Instagram is so popular, YouTube is so popular. Go get an LLC, go get a corporation. Yeah. I want to open it in Wyoming. I want to open it in Delaware. First of all, what do you do? What is this for? What is your business for? Oh, I want to open up a pizzeria down the block in Yonkers. Then why do you want to open up a corporation in Delaware? Just because you heard a cool TikTok doesn't mean that it might pertain to you, doesn't mean that it's going to help you, doesn't mean that you need to do it. With an LLC, what it stands for is limited liability company. That's what an LLC is for. So it's trying to limit your liability. Right. Before any tax incentives, tax write-offs, before you think of anything, you want to think, all right, do I need this LLC? Is what I'm doing, is that going to put me in jeopardy if something happens, if someone tries to sue me? Right. So I always say, all right, what are you doing? So the client might say, oh, I'm thinking to go sell some t-shirts. All right, go out there and make some money first. And then if it's, if you stick with it, you make money, then come back to me, we can make an LLC. If you come in the first day and you say, well, I'm going to open up a construction company, you got to do it now. Because if you walk on that job site day one, someone gets hurt, that's your butt on the line.
Yeah, okay. So it depends.
Yeah. And the situation depends on, I guess, the organization that they're opening up and, how serious, I guess, the work is going to be. For
because I don't like seeing people waste money. They're going to make an LLC. And then it might not be something that they thought it was going to be, or it might be a hobby, or they just didn't have the time to do it. People are busy, right? So now you pay money for an LLC. In the state of New York, you also got to pay money to publish it. Now you got to pay extra money to file your tax return. Now you're going to have to pay to dissolve it if you don't use it. So you just wasted a lot of money just because you thought, you heard something about making an LLC.
How much, roughly, give me an estimate how much you think it'll cost to open up and start an LLC? Roughly, it doesn't mean exact.
So a lot depends on where you are, what county you're in, and what state you're in. So you could do it yourself for cheaper, I would say, than other professional services that are going to do it for you. You can go online. You could probably do it for maybe $300, $400. But if you're in the state of New York, you also have to publish it. It's an old antiquated rule that if you're a new LLC, you have to publish in a local listing, I'm a new business and I'm doing business under this name.
So I know, like with taxes, you do tax, and that's after the fact. Do you guys also advise people on that stuff beforehand, so they know what
absolutely.
to do beforehand?
Yeah, okay. Because once you come in and get your taxes done, like 90% of what's been done has already happened.
Yeah.
So I'm just gonna, do the most that I can with your deductions and make sure we capture everything. But a lot of it is tax planning and not just preparing.
Yes. Yes.
Okay. All right. So here's a question: what's the most misunderstood tax rule that gets people in trouble?
That gets people in trouble. This was a good one. Good question. I would say probably on the more simple side is people that think extensions, like, oh, well, I missed the deadline, I'm an extension, so I'm all right. Even if they filed a timely extension, that doesn't mean that it stops interest on what you may owe. So that's a big misconception, I would say. Or some people think, oh, like I could file my extension in June or July. It's like, no, if you didn't do it by the tax deadline, then your extension is null and void, So I would think that's more of a common one.
So you guys work all year long, that somebody can call you and talk to you and figure it out?
Yeah, absolutely. We're there, all year long.
Okay.
24/7. Not 24/7?
During tax season. 24/7.
Oh, yeah.
7 days a week during tax season.
Any of the new tax laws are people affected by it, or is it a big change, or just about the same?
The new tax law, so there's a lot of proposals with the new big beautiful bill that they're calling. And I'm excited to see what's going to happen, because I think that there's things especially that affect people in our area, which is the biggest one that you hear people talk about is the SALT cap, the SALT deduction, which is state and local tax. So if your real estate taxes plus what you pay to the state in income tax goes over 10 grand, you can't write it off anymore. It gets capped at 10 grand. Okay. Now, they've been talking finally about raising that. So we're going to see to 40, but then I don't know if it was the House or the Senate came back and said, no, we're not going to raise it to 40. So there's probably going to be some negotiation that happens.
Yes.
But at least it has to get raised, because it's unfair to people like me and you. We're in the metropolitan area. The real estate taxes, you're in real estate. How crazy is real estate taxes around here?
Yeah,
crazy.
Right? So to lose out on what you're actually paying for in taxes as a deduction is unfair. To someone in Alabama, they might be paying 9 grand and living in a mansion.
Right.
You see what I'm saying? And they still don't touch that 10 grand. You're paying 10 grand in Westchester County. You're not living in a mansion. You're just getting by.
Yeah.
Very true.
What about all the stuff with technology, like TikTok and Instagram? That
I think overall it's a positive, because there's more information out there and it's starting discussions for people. So people see, I saw this online, I saw that online. I think what's interesting with AI is a lot of people, funny quick story too, is a lot of people are like, well, ChatGPT said I could get this as a refund. And it's like, I've seen it where people think, oh, I'm supposed to get this big refund, but no, actually you might not be able to deduct what you thought. Yeah. But I even saw it on the other way around, where it's just like, oh, ChatGPT said I owed like 9 grand. And then I was like, oh, do you have a mortgage? Yeah, I have a mortgage. Okay, how much do you pay mortgage interest? Oh, 33 grand. I was like, did you put that down? No.
Okay.
So we did the return, you only owed 3.
Yeah. So basically you shouldn't be doing your own.
Right.
like my mother-in-law.
I think it has so much information. It's already almost smarter than your common person, that we think we're just going to trust it. Yeah. But it's how to apply that information. Are you asking it the right questions?
Yeah.
So it's just the little simple things that could easily go left if it's not done right.
Yeah. So it's definitely worth it sitting down with a professional that's been doing it for years and been doing hundreds and hundreds of them.
Yeah. And sometimes you might only have one W-2 and it might not be different from TurboTax, but at least you know, and at least you found out, because sometimes it's not different. It's a lot different because you left out certain deductions and things that you didn't account for.
Yes.
Can you get in trouble if you leave stuff out?
As far as what? Income?
Yeah, I mean, well...
Or deductions?
He's talking about jail. No.
I mean, can you... I mean, like, if you're not really too honest on your taxes, can you really be...
Deductions, they're not going to come and say, hey, you forgot to write off your mortgage interest, because that's in their favor.
That's right.
that's helping them. So they're not gonna let you know. They're gonna let you know if you forgot to report income. Oh, remember that side job I did? I was doing bartending and I had a small extra 10 grand that I made on the side. I forgot to put that in.
Yeah.
They're gonna let you know that you forgot that.
Yeah.
But if it's something that's gonna help you, most of the times, there's no system to, hey, you forgot this.
Yeah.
And then one last question for me is it true that the IRS never calls you first?
Yeah, that's an important one. That's an important one, especially for a lot of the baby boomers that pick up and think something's real. You get a lot of those instances where like, oh my God, well, I just was freaking out because I haven't filed my taxes. And the IRS is never going to call you first. That's not how they work. It's not how they operate. They're always going to send you something in the mail. And then if it was ever really, really serious, like they might show up at your door, but that's very rare.
Oh, wow. Wow.
But they don't call people on the phone.
What are they going to do? Give me a heart attack? Oh, my God. Oh, man.
It's crazy.
No, that's like if you're...
And I'm glad that you're saying this information because there's a lot of scams and a lot of people losing money. There's a lot of people,
A lot.
A lot. So it's good to know for people to know, like, this, what you said
That's
before.
a great question because it applies to
definitely
everyone.
Never, they'll never contact you, right?
Never. They're never going to call you on the phone. It doesn't happen.
Oh, okay.
Yeah.
That's good to know.
Good to know. Very good to know.
Anything else that if you had to just say to something people don't know, they should know right off the bat? Come use you.
Yeah. Come to our office.
Yeah.
We offer a free consultation, so that means we always sit down with you. We're very honest. We'll say, even in an instance where, hey, it's not going to be different from TurboTax. It'll be like, listen, you only have one W-2. Go do it yourself. I might charge you $250. You might, do it for $50. But in a couple of years, you open up an LLC and you buy a home and you have a rental home. Now, all of a sudden, I become a lot more worth it. My savings are a lot more than what you're going to get online. Yeah. But people appreciate the honesty. So they're saying, you know what, I appreciate you being honest with me.
It's really good.
Yep.
Yeah, really good. Yep.
Welcome to the second half of Now You Know. Now, this is a question. In taxes, let me tell you something. I hate to pay them, especially as someone who, I know, exactly. Especially for someone who works for themselves, like independent contractor. So really my question is, what should I look out for if I'm self-employed?
If you're self-employed, it depends on what industry you're in, but there's tons and tons of write-offs. So it's a lot different from just being on a W-2, where if you're on a W-2, it really comes down to what you made and what you paid in withholding. If you're self-employed, especially being in real estate, there's so many deductions. That could be you driving from spot to spot. That could be you paying for licenses and, going to networking events and, taking someone out to eat that's a potential client, and all the things that you do are all of a sudden tax deductible and are going to lower what you're actually paying tax on. So
yeah, I like that. But it's hard to keep track of all of those things. Do you have any suggestions? Because I know last year, I feel like I probably did not have enough. I didn't count enough. I didn't count enough gas. I didn't count enough, when I talked on the phone.
Right.
So what would your suggestion be to keep track of that?
For simple things like your phone, you could always kind of take a percentage of what you're using. So if you're really using your phone all day, you could say, all right, whatever 75% of this bill is, do I use for business? They're not gonna, fight you tooth and nail over something like that. But when it comes down to what you're actually spending throughout the year, one of the things you could do is set up a business account. So whether that's under an LLC, which is great, or whether it's not, at least every time you're doing something business related, you're swiping that card. So at the end of the year, okay, I'm looking in this account, and I know everything that came out are my deductions. These are my expenses.
I like that, yeah.
And for driving, there's a lot of apps now that do it. So, you kind of just have to get yourself in the habit of getting in the car, turning on the app, and saying, okay, everywhere I go now, I'm, all day long, I'm driving around from spot to spot to show off these places.
Yeah, okay, I like that.
Okay, good to know. So what's the difference between using an accountant and using TurboTax?
It could be a very big difference. You're always going to get things that are way more curtailed and specific for what industry you're in and what you're doing, and just versus, is this tax deductible, is it not? And you don't want to miss anything, right? You don't want to, because part of what you said is, I don't know if I missed anything. What do we do when we sit down with you? Okay, we're going to ask you questions. All right, what about this? What about that? Did you do this? Did you do that? Just to kind of remind you and refresh you, and it might spark something. Oh, actually I did. I took a course. I took a class. I forgot, I forgot that. I forgot this. So a lot of it is simple.
I actually did forget that.
Conversation like this that could spark that. So. You know, we always say it's a long answer, but I think that's the short answer for it.
Yeah. Okay.
And then also, what do you think about the new tax plan proposals?
So there's a lot that's into it, right? That goes into it, and we don't know what the finalized version of it is at the moment. But I think there's a lot of good things. I think no tax on tips is good. No tax on overtime is good because you're incentivizing people to work, and people in those industries that work for tips, you know, a lot of their money is coming from tips, right? If you're in a service industry, you're working in that industry because of the tips.
Yes.
Right.
So in the old days, it used to just mostly be cash, so you didn't have to worry about it, right? But now cash is not as prevalent as it was, or you know,
Nope.
now everyone's swiping all the time, so now you're paying tax on that income.
Yep.
So I think it's a good thing. I think a lot of good things were proposed. So anytime there's less tax, I think it's a good thing.
I got a question, right? More so like the origin of tax. I feel like I heard somewhere, maybe you can clear this up for me if I'm wrong. Weren't taxes originally started just like for wars and things like that?
Yep.
And how did we end up getting taxed yearly on our income? How did that come along?
Because government spending is out of control, and there's no way to, you know, I don't want to get too political, but I don't think it matters what side you're on, whether, you know, you're Democrat, Republican, Independent, whatever it is. You know, the military budget is astronomical. What we spend money on in all these different programs that might not really be helping people is astronomical. And you brought up a great point. It was started for war. I think they actually did, you know, bring it out for the Civil War, like very, very short time. But then World War I, they brought it out, and it was only for high net worth people. Right. So it was like, we're only really taking from people that are well off, that could afford this, which is great.
Yeah.
But then it turned into, somewhere after World War II, it was just like everyone's getting taxed. And then it's hard as the government, it's like, we can't, there's no turning it off. It's like, once you let out of Pandora's box, there's no turning it off.
Yeah.
So it's so much of what the budget is comes from income tax.
That's very
And we
interesting.
overspend, right? We don't even budget what we're getting from tax. We spend double.
Are we something like like 30 trillion in debt or something?
Yeah, I just think they're kicking the can down the road until.
Yeah.
Man.
And what's interesting is that those who are that made sense in the past. It was those who are well off, but I feel like as time has went on, those who are affected the most by taxes are those who are low. They have low income,
Right.
Or no or low, and that's what
The whole system, I think, kind of benefits the very wealthy that have, you know, people that can set themselves up to avoid taxes.
Yes.
And the tax system does benefit the very poor.
Okay.
You know, like where it's like they're getting big credits.
But the middle class.
But everyone in the middle, and the middle isn't that, you might not be doing well, but the lower end of the middle, you don't really have a lot of money.
Yeah,
Everyone
that's
in
true.
that middle is kind of paying for this whole system, and they're going to work and they're paying so much. You know, you're paying 24%, 32% bracket, whatever you're in. That's not including whatever state tax you're paying.
Yeah.
That's not including the real estate taxes you pay. It's just taxes, which, you know, you pay into this big system.
It's interesting because my husband had the whole time he was having taxes taken out of his check, and he thought he was going to get a lot back. Well, he actually owed quite a bit. So, and the thing is, he's like, well, I don't want to take out less because I need that money throughout the year. So now he's just going to be caught in a cycle of having to owe this amount. So it's just interesting because it's kind of like you lose either way.
Yeah. It's tough getting all your money up front. And then,
Exactly.
like, sometimes it's easier when you're on the W-2 because you're only seeing like after tax money.
Yes.
'Cause all the withholding has come out.
Yes.
That brings me to another question. Basically, so you said the middle is kind of funding the system, like the middle class is funding the system, right?
I like
so
this guy.
What are the legal loopholes that the top 1% and maybe even the top 10% are using to duck all these taxes?
So it could be specific to an industry, right? If you're like, obviously one of the famous ones is Donald Trump. People talk about it all the time. Why doesn't he show his tax return? And, you know, when you're a real estate professional, then you're allowed to deduct losses, and depending on what those losses are, they could offset his other gains. And, you know, on paper, he might not be showing, I don't know, we don't know, right? We haven't seen the tax return, but there's stuff like that where if you own a rental property, right? And you have your other job, you're not a real estate professional because you're not making all of your money in that profession. That's not your bread and butter.
Yes.
You have a 9-to-5, you have 2 rental homes. They'll say there's limits on what you could deduct. You can only deduct up to 25 grand in losses, and then they roll forward. Or if you make over 150,000 on your other job, they limit your losses. So that loss limitation is taken away if you qualify as a real estate professional. So that's like one that's a little bit industry specific, but I think there's just different ways where like, you know, they could pay themselves in dividends from their companies and, you know, different ways that they can strategize.
Yeah. What's something that most people don't realize that they can legally deduct?
In you're just talking like anybody?
Yeah.
I guess, well, things are going to change, right? So there's a lot of new things coming, but you always want to look out for, if you're in school, making sure you're, you know, if you might qualify for college tuition credit or student loan interest deduction.
Okay.
There's so many different ones. It's hard to like pick one out and say this is the one that everyone
Yeah.
forgets.
Wait, so you can deduct for student loans?
Student loan interest.
Interest, okay.
Yeah,
Oh,
where
wow.
just-
Okay.
You know, there's a bunch of different deductions out there, but I'm trying to think of maybe the most common one. I don't know if it's just
Okay, well,
skipping my mind.
while you're thinking, what is the funniest or most outrageous thing that someone has tried to claim as a business expense?
Well, one funny one is people say, "Oh, can I deduct my dog, or can I deduct?" Like, you know?
Well, they are expensive.
Yeah, they can be. Yeah, you got to get the dog a social on the black market, and then you're good.
Yeah, exactly.
But yeah, if there's no social security number, you can't write them off as a dependent. Yeah, so there's all types of, you know, funny ones like that.
Yeah.
I got another question. So why do some states have income tax and others do?
I don't know. I was just asking myself this yesterday. I was having a conversation yesterday because it came up about the new mayor that might get elected, and I say, you know, he does have a lot of cool ideas, but if you're going to raise taxes, we already live, if you're in the 5 boroughs and one of the most heavily taxed places in the country, how does Florida do it? How does Texas do it? I don't get it. And New York State's broke, right?
Yeah.
So it's not like, where's this money going?
Yeah.
Like, and you know, Hochul put in the what is they call that? The new toll if you go past 59th Street or
congestion toll,
congestion
yeah.
toll.
Yes.
I'm like, where is this money going?
Yeah.
So my thing is like, I personally would always be down to say, all right, I'll pay a little bit more in tax if I know it's actually going to help people, but where's the money going? So
Yeah.
I don't know. I don't know how some states, they budget it a little bit differently. And I don't know. That's not,
Yeah.
it's a good question.
Yeah.
Thank you.
Good question.
Well, we thank you so much for joining us.
Thank you for having me.
Yes, again, wealth of knowledge. We will have all your information on the bottom of the screen or after the show is over. So feel free to contact him for your
Awesome.
taxes.
Thank you guys. Thank you for having me. And I really appreciate this opportunity on coming on. It's great what you guys are doing with your show. This is important information. So, you know, it's very useful.
Thank you so much.
Appreciate that.
All right, guys, it was a great episode today. Kenny came through with a lot of information that the public needs to know, and definitely learned a lot today. What did you guys learn from today?
I learned a lot. I didn't know taxes started off with war, so that's why this show is important. So it's things that we don't know,
Yeah.
we can learn.
Also, you know, the way to deduct taxes as a person who has a 1099 and, you know, how to be able to, you know, deduct as much as you can.
Yeah, he confirmed for me what I already knew. You know, the government makes the people pay for their irresponsibility. And that's why they tax us the way they do. But it is what it is.
Yeah. And the more you know is important to learn. And if you guys can think of if you know of any subject you would like to learn more about, just get in touch with us and we'll try to get somebody on to.
And speaking about that, that's a perfect segue into our YouTube channel. We have a YouTube channel where we post all of our shows. Now you know, you can find it on YouTube. But in the comment section, comment what you want to see, and we'll make sure we make that happen. We also had the last episode, the episode before last, was about financial information and really how to build wealth, how to work on your credit, how to save. And that episode, I think to this day, has the most views on YouTube. It's a really popular one. And since then, I've decided to actually use their services, the Mount Vernon Financial, yes. And from there, I've already saved, and I am now working on building my own wealth. So I would say please get in contact with them. And we have a seminar live in person, July 23rd at 5:30 on Wednesday at the White Plains Library. You can find it on Eventbrite. You can find it on Facebook. But please take the time to come. If this is something that you would like to work on financial problems or just learning what to do with your money, how to invest, how to save, how to make the most, how to have accounts where your money will just build interest by itself. Please come so you can ask your questions. You can find out firsthand how you can build this wealth.
And all of it is free. Their services are free. Coming to the seminar is free. Everything is free.
Yeah. Also want to say, if you're watching on public access, thank you for taking time to tune in. And if you're streaming on YouTube, leave a like, comment, and please subscribe for more.
Now you know. Get to it.